I think that if you raise a Series A or a Series B, you absolutely need a very good executive coach, or else you are at a massive disadvantage. And all my best companies and best founders, they all have executive coaches.
Ignition sequence start. 3, 2, 1.
Marvin, how's it going, man?
Good to see you.
Appreciate you coming on. So 500 startups, I mean, way past 500 startups at this point.
2,300.
Holy moly. I knew it was 1,000 plus 2,300. That's just crazy.
It's insane. It's kind of insane.
And how many years now have you been doing this for?
So I've been doing this, it'll be 6 years in February.
And prior to that, you were at Yahoo?
I was at Yahoo for 10.5 years.
Yeah.
And 500 startups have been around for 10 years?
Yeah, I think 2009. Yeah, 10 years.
No, 9 years. 9 years. Not
okay,
10
2010.
Years, 2010.
Yeah.
Middle of 2010. And I joined beginning of 2014.
And portfolio wise, who are some of the notable ones you like to point to?
TalkDesk.
Yeah.
Ones I have invested in, Aircall.
Yeah.
Who's
Huge,
ironically both in the same space.
Yeah. I was like, they look familiar when I saw Aircall.
I did not know Tiago when I made that when I made the investment. Both have turned out to be very good.
Yeah.
Aircall, ManyChat. Do you know ManyChat?
Yeah, I use ManyChat.
I was the first investor.
No
in
way.
2016. Yeah.
That's
so
awesome.
they went through batch 16.
Yeah.
Pipefy, also on stage.
Yeah.
So I invested in them back in 2015.
Yeah.
And so those are the ones that, and Shippo.
Yeah.
Right.
Yeah.
Crushing it.
Yeah.
So those are probably some of the, at least within my portfolio, are sort of better known
And
ones.
so like, what did you do at Yahoo prior?
So I had 5 different roles at Yahoo. So I was a brand manager in the international marketing group.
Yeah.
I spent 2 years running global sales operations. I spent 2 years running global ad strategy, sales strategy and sort of ad products. And then I spent 2 years in the emerging markets group. I ran Middle East, Africa, Eastern Europe. And then my last 2 years, I was a commercial director and managing director of the EMEA expansion market. So everything in Europe, Middle East, Africa, except for UK, Germany, France, Italy, Spain, like everything else.
Yeah. And who was it at 500 that you knew of or that?
How I got in.
Yeah.
So it was actually a good friend of mine from Yahoo joined as a managing partner, a guy named George Kellerman, who is now at Yamaha Motors Ventures.
Yeah, I don't know if I met George.
And he was like, hey, dude, you're not doing anything. Like come hang out, come mentor. And then I happened to meet him in Singapore with the famous, now infamous Dave McClure, and got to know Dave and team really well.
Was that on a Geeks on a Plane?
This was in Singapore, so it just happened to be at a conference. So so in between 500 and Yahoo, I spent 2 years. I just took 2 years off goofing around.
Okay.
I done okay.
Yeah.
And I just goofed around for 2 years, and then I got to know them. I got to know the 500 team, like Christine, and so it was Dave and Christine, the co-founders. I got to know them, over almost 2 year period, and mentored at was very active mentor at the startup Accelerator because I was bored and just wanted to just goof around, right?
Wanted to add value and help.
Yeah.
What was the impact post the Dave McClure situation to 500? Because I know Canadian, I believe the fund up there ended up winding down, and I'm assuming in the Valley it was fairly challenging.
It was hard, right? And it was one of those things where I'm really, really in debt to Dave for bringing me in. I generally think he cares a lot about startup founders, and he made some bad mistakes of judgment, and we had to. And what was ironic about? Ironic. What's tragic about the whole thing? Just even back then, Dave, as well as Christine, we are one of the
little closer.
We're one of the biggest investors, actually, female founders. I think it's 30 to 40% of our portfolio is just female founders. So we put our money where our mouth was, and then to have this happen, it's tragic. So we took a hit from that, but we've come back. So it's been 2 years now. We're investing as much as we've done before.
Was there a thought to maybe rechange the name? And who's still, man? Is Christine still there?
Christine is the CEO.
Okay, cool.
Yeah.
Awesome.
So it was always Dave and Christine, the co-founders.
Yeah. And did she come from Yahoo?
No, she was Google.
Yeah,
she was Google.
Okay.
Yeah. And so that was just we've taken sort of our punches, but the way I thought about this, all this stuff was a huge surprise to me, and we took our punches. But the way I thought about this was, look, we do good work, right? We think we do a lot of good for the ecosystem across the globe.
Yeah.
We've invested in a lot of really, really great companies, and I think most of us have don't behave badly, right? So I think the good adventure comes out. So I focus my team, which is like, let's just continue to focus on our mission, the mission of helping founders, right?
Yeah.
So this idea that, talent is everywhere, but opportunity is not, like, let's continue to do what we're doing, find great founders across the globe, invest in them, and help them. And that's what has kind of kept us alive.
And that's what you guys have done. And the program today, and again, just keep it close.
Yeah.
The program that you guys offer today, is it still the, I don't know, everybody calls it different things. Is it still the Accelerator plus?
Yeah, still the Accelerator. So we're seed, we call it the seed sort of Accelerator program.
Yeah.
And it's the same, more or less the same program. I mean, it's evolved, obviously.
How many cohorts, how many locations?
Two cohorts a year
in
San Francisco.
Okay, in San Fran, no Mountain View anymore?
We shut down the Mountain View office about 2 years ago.
Okay.
And the main reason for that was just we saw a massive shift of the startup ecosystem towards San Francisco.
Yep.
So 500 was actually very far ahead. So if you look back 5 years ago, and you visited our office years ago, it was people like, why are you going to do San Francisco? Why do you have 2 offices, right?
The 2 offices I definitely asked.
Yeah, and I think we did too. And what we found was just like the ecosystem, most people don't want to live down in the South Bay if you're a startup founder. And so we've seen massive migration.
Well, I mean, even the companies, like I think it was like Zynga, Airbnb, like for Dropbox,
Salesforce, Pinterest, Twitter,
SlideShare, like they're all
in San Francisco.
Yeah, but back in the day, it used to be the Valley, and people didn't really build the companies.
And so what you're seeing now is actually it's all the big companies have their campuses down in the South Bay, and a lot of the new startups are in the city. So what we've seen, even particularly in the last 2 or 3 years, there are very few Sand Hill Road VCs that do not have an office in San Francisco 100%,
now. Even the law firms and stuff.
Yeah, they're all in SF. Yeah. And even Google, Facebook, what was Yahoo, now Verizon Media, like they all have huge presences in the city.
Yeah, hence why the real estate is
crazy
through the roof.
Oh, Square, that's another example, right?
Dude, Square, Twitter, I mean, Uber, those buildings are huge. In regards to the investing side, I think I read somewhere, I don't know if somebody quoted you, but you said that at the early stage, like you really just invest in teams.
Absolutely.
And what makes a great team? Is that, and I know you've been on probably what makes a great investment? It's like,
I'm happy to answer the question.
But I do and I don't. Like, I mean, what would be the unique aspects of team that is less known?
So I think like diverse teams, and I mean diverse of just sort of functional diversity,
roles.
Right? Like roles. So someone who's like really good on the business side, somebody that's really good on the technical side, and these days probably somebody that's really good on the design side and UX side. Really critical, right? And you and I are both in the SaaS space and playing the SaaS space. Like that's actually like look at the difference of Concur versus Expensify.
Yeah.
That's a huge difference. And
from an experience point of view.
From an experience perspective. And if you even think about the fact there's this trend that everyone talks about, it's like the consumerization of IT, that hasn't really happened.
No.
Right? Like
there's
not
still some really bad products out there.
And so there's still a lot of headspace for this.
Yeah.
And so I'm still very personally excited. So I think on the design side, absolutely mission critical.
So if you meet a team and they've got a designer, a salesperson, and an engineer, you're like, whoa, okay, let's talk.
Yeah, a team that actually is like coherent, right? A team focusing on a market that actually makes sense. Absolutely.
And at what level of traction are you looking at? I mean, generally speaking, because I know you've probably written checks to just incredibly, they've got the it factor to folks that come to you with real MRR growth.
Yeah. I would say it varies. So for example, ManyChat, right?
Yeah.
They didn't have anything.
They had no revenue.
They had nothing. But it's just like, wow, this is a super smart founder. He really has a great perspective and view on sort of like where the bot world is going, where marketing is going, on Messenger in particular, their Messenger marketing platform. You're like, that kind of makes sense.
Yeah.
And his perspective, he had done some projects, for example, with like Telegram, like, for chat on Telegram. You're like, okay, he's probably gonna figure this thing out, right? And that has worked out really well. In the case of Aircall, I think they were like 20,000 or 30,000 in MRR when they came to our program.
Yeah.
But just like amazing team. Like that team was very diverse and it was coherent. Like they just all talked about the business and the vision in the same way. I think about like.
And where'd they come from? Paris?
Paris. Yeah. Paris.
I remember that. Yeah.
Amazing team.
Cool. And so did you see, is 500 for the most part almost like a gateway into the Valley somehow?
In many ways, yeah. So about 30.
Because that's the one thing I've always, I know Dave, Geeks on the Plane, he was very much about the international proxy, essentially the the disconnect between valuations and capital and human like talent.
Yeah, and what we see in general is if you think about like the world, how much the world has changed just even the last 5 years, right? So even 5 years ago, I hate this term unicorn, but if you look at the unicorn count, it was probably like 70-80% US and maybe like 20% international, mainly China. Now it's probably 50-50. Right.
Really?
So you take a look at a lot of it's China, but also the growth. There's been a bunch of unicorns out of Africa, a bunch of unicorns actually out of like
what
Latin America.
What are some examples that are kind of notable that I might not realize are?
So Rappi, one of the fastest growing food delivery companies, crazy, like growing like crazy out of
where?
YC
India?
company. And then they went back to Colombia and they're growing all over Latin America.
Really?
Crushing it. Yeah, crushing it. Or another one, UiPath, right? Like let's talk about SaaS, right? Like UiPath. Like this is a company that's been around for I think 10, 11 years,
like
but out of Romania.
InDesign competitor or like InVision app competitor, or what's the UiPath?
Oh, UiPath, they do this thing called like robotic process.
Like schematics?
Yeah, so it's just like any process that you're doing that humans are doing like super manual, they kind of like automate it. So it's like robotic process automation.
Oh, that makes sense.
Yeah, and it's one of the fastest growing companies.
For sure.
So one of the fastest growing SaaS companies.
Wow.
And
so they don't do hardware?
No, software.
SaaS.
Yeah. Out of Romania, but headquarters in New York now.
What's the thesis looked like so far in the 500, essentially smaller bets spread across? Like, is the thesis still the same from 10 years ago? And if so, what do the numbers look like from the fund point of view that you guys can share?
Yeah, so it's the thesis is the same as it was before. A lot of little bets, follow on the winners.
Yeah.
Active in all different sort of types of spaces.
Yeah.
And for me personally, I've just found like all my best 80%, 90% of my best performing companies in the portfolio have actually been SaaS, have actually been either immigrant founders or foreign founders coming to the US, generalizing, right?
Yeah.
And so the performance has been good. We have, out of 2,300 companies, we have like 14 unicorns in the portfolio. Returns for Fund 1 are easily over 20%. IRR, which is not bad, right? Like it's actually pretty. I think it's a little bit higher now. We just recently
people that were probably betting against it in the early days. I remember it was pretty controversial.
Yeah, definitely. It's still
because the investors think that they have some secret sauce or like this magic touch, right? Like I know how to pick them, but it's like
I think that having done VC now for 6 years, having been in Silicon Valley now for 20, I think there is a much bigger element of luck than people choose to sort of believe. But having said that, there are some, like there's guys like Mike Maples, who is like, he is a consistently good investor, right? Or Chris Sacca, he's a consistently, like you do one, one sort of unicorn, you're like lucky, right?
Yeah.
You do 2 or 3, you're like, okay, there's like something going on here.
Yeah.
And so you do see a lot of these consistent sort of like pickers. And so you're like, those are good investors.
Yeah. What's the challenges at 500 now, as you guys come up through rebuilding the business? What are some of the things you guys are working on that
I think scaling the business now.
What does that look like?
So for example, a lot of it is about providing sort of better support for your portfolio. So when you have like, nobody's ever done this, right? Like 2,300 portfolio companies, like how do you do a proper job supporting, communicating? And we still have a lot of work to do on that area. And that's been a big focus over the last
So do you guys take board seats on any of them?
No, we have board observer rights, but we very rarely are able to exercise.
And then in regards to the fund, is the follow-on capital part of the fund structure?
Yes, correct.
Okay, it's not a separate, because I know YC has like a growth
they have
fund.
this continuity fund.
Yeah.
We have, it's all the same fund.
Okay, and then how do you avoid signaling issues if you don't follow?
Yeah, that's tough. And so what we have done, and we're still figuring this out, and we discuss this all the time.
Just quick, because some people might be listening, what the hell are they talking about? Essentially, if you have an investor and you raise future rounds of capital, ideally your existing investors follow along because they know you really well, and some early investors don't.
Yep.
It's easy for me because I just don't, so then I don't have to decide. But if you choose not to and you could, how does that impact the founder? So how do you guys deal with that?
Yeah, so the signaling risk is actually a real thing. So for example, we used to do a lot of follow-on investing. It's like, first couple batches I was involved, and we realized I was just like, wait a minute, this kind of screws like the rest of the accelerator companies. Yeah. And so what we decided to do is like, all right, like, you know what, we just don't do follow-on, at least for the first round, like the initial seed round that they raise afterwards. So if they're raising, say, $1.5, $2 million round. Like,
and do you try to keep pro rata then?
Yeah, we keep pro rata. We have follow-on rights for all the.
So do you have to exercise pro rata then to keep the next one?
No.
You can actually get pro rata and keep it even
Correct.
for like the next.
Correct.
I didn't know that.
Yeah. So our in the Accelerator terms, it's we can invest up to 20% in the next round or 500K, whatever's lower.
Okay.
Right. And so we keep those. And so what we do
every subsequent round though?
at least for the next like couple rounds.
Okay,
Yeah.
cool.
But not forever.
Yeah.
Because that's not super founder friendly,
Yeah.
right? And so, and we also want to be thoughtful as well too. Just like we don't want to screw the
Yeah.
founder. And so for the biggest thing for us is really this initial round, we won't do follow on. But
That's
then we'll
a
do
good way
follow
to
on the
do
next
it.
one. Because you just don't want to, like,
And I mean, technically, you got more information to look at that point anyway, so it might be a better way to make the decision.
yeah. And so this is the main reason we just like, we'll follow on maybe at the A, but we probably won't follow on at the seed. At least we haven't in the last 4 years that I've been running the program. And I've been running the program now for almost 6 years, but at least in the last 4 years I've been running it. We just haven't done follow on.
What's the craziest like hustle story that you've seen either, in your own batches, like just the will to succeed? What are some founders that you're just like, man, I can't believe they did that?
I mean, I have like founders who are like literally driving like Ubers just to keep the company alive, right?
Yeah.
Like I have a lot of admiration. I have a lot of admiration for founders in general.
Because no investor would be pissed off if they shut it down. Like we know the risk.
Yeah.
But they're saying, no, I'm going to make this
No,
work.
we're gonna go all out. It's just tough. And so
sometimes just time.
yeah. And I have to say this is ironic as an investor. Like sometimes I have conversations. I'm like, okay, dude, you just need to do that. It's just like, you just need to shut this thing down, right? Like, or if you're trying to sell this, is like, give yourself like 3 months, maybe 4 months to run the process. If it doesn't work, shut it down.
Yeah.
Don't worry about it. Like, I'm not going to be mad at you, right? Like, save your time, right?
And
like,
your health. I mean, I was talking to a founder the other day and he didn't look good, man. Pale, put on like 30 pounds. Just like, I was like, man, you got to go, A, go see a doctor, and then B, like don't kill yourself. And he's like, oh, I want to make it right for all of you guys. I feel horrible. I'm like, we're big boys here.
Yeah, exactly.
We actually have a portfolio. You don't.
Yeah.
Like, I get it. But it's almost like my perspective, if they do everything right with what they had, then I'm not going to be upset.
Yeah.
If anything, I'm going to back them.
Exactly. There are a lot of founders where their companies failed. I'm like, hey man, like you died honorably, right? Like you went out and you tried to do the right thing. It didn't work out. Awesome. You let me know. Your next company, I'm in.
Yeah.
Right? Because just I know you're going to try to do the right thing. That's all that matters.
What about founders that came into the batch from other countries? Did you see people like one-way tickets, like sleep in her car?
Yeah, hardcore. I mean, we had one founder from Canada, and he literally, I don't know if I would recommend this to folks, but I mean, he was literally couch surfing for the first like 2 months, and he would steal food at the office. But I'm like, A for effort and hustle. And he kept his cost structure like, I was just like, how much are you spending a month? And it was some ridiculous, like, I think it was like $2,000. It was like $2,000. Like in San Francisco,
that's crazy.
A month that's crazy
Yeah.
good. Like, I don't know if there's any places in San Francisco you can get for like $2,000 a month.
No.
Like, so I just give a lot of credit to this. I appreciate the hustle.
So how many people go through the batches then now?
So it ranges. So we'll do between 30 to 35 companies a batch.
Cool. And when they show up, I mean, I can just put myself in the seat of a founder and never been to the Valley before, and I got into 500. What's the process? Like, what's day one look like, week one, month? Like how long is it?
It's a 4-month program, 3.5 to 4 month program.
So what do you guys do to indoctrinate, connect?
So we first 2 months is really just sort of more community building or just them getting to know their batchmates, because I think that's really critical. And then I step up the pressure afterwards. So I'm very honest with the companies where I'm like, and you've seen my style, right?
Yeah.
Like just like I beat on the companies, but it's out of love. It's not sort of like just for the first, it's not sadism, right?
Yeah.
And so just like for me, it's just like, we're here to push you, right? And everything you should be doing is like focusing on metrics, focusing on growth. How do you find the sales channels or marketing channels that work? And it's just like, what's the one metric that matters? And we're tracking you every week to see like, are you making this grow or not? And if you're not, like, let's sit down and figure out like what's going right or what's going wrong.
Yeah.
And so it's a boiler room.
And you've seen the show, I'm assuming Silicon Valley, like how it's when people ask you like, is it really like that?
Yeah, it's pretty. I love the show, and I laugh and cry at the same time because like you recognize the characters,
you know who they're modeling.
You know exactly who they're modeling,
Yeah.
and a lot of it is ridiculously true. By the way, a lot of the writers are actually Silicon Valley people. So one of the most well-known writers is Dick Costello, who used to be CEO of Twitter, and actually prior to that was a comedian.
Oh, you're right. He actually was he did plays and stuff.
Yeah. So I don't know him personally, but like that's one of the reasons I think a lot
and
of the
he
consultants
would have seen some of that crazy.
A lot of the consultants, a lot of people, they get great writers and they get great consultants to tell them how. And so you watch a show and you're like, oh my God, like that's really how it is.
The incubator at the house, I spoke at one. Like I remember being in the Valley and some guy is running this, accelerator incubator, and he's like, come speak at my thing. And it was at a house and there's like 14 companies. And I'm like, where do you guys live? And they're like, here. And I'm like, isn't that this guy's house? I was like, people are like, oh, that sounds so crazy. I'm like, no, this is very normal.
It's wacky land.
It's not even exaggerated.
Yeah, it's wacky land. It's not exaggerated. Like you think about Hooli's Google, right? Like
if you haven't figured that out.
God, it's so funny.
So you've obviously see this craziness, the reality of it all, but I mean, lightning in a bottle does happen. You've seen these companies grow. What is if somebody's onto something, how do you support them to make sure that they don't mess it up? What are your thoughts of?
I mean, this is what has been challenging, I think, for me as well as a lot of other sort of ex-operators. I'm not an entrepreneur like yourself, but like I worked at a lot of companies and ran a lot of businesses, and I think this is one of the challenges of an operator turned VC. Just a lot of times, and I think this is where I made a lot of mistakes in the early days when I was doing investments. Because as an operator, you go, "Wow, if I was running that business, I could help them do all this stuff." Yeah. And actually, what you realize as an investor, like you're just an advisor, right? Like you're like, I think you should do this, but it's actually your company, so you can choose to do your customers better. All this advice might actually not even make sense at all. So it's your job to kind of decipher this stuff, take it in, and make the best decision that you think is right. And so to sort of step back and know that you really don't have a lot of
the context of making those decisions.
Yeah, there's that part. And also you don't necessarily even, they can choose to take the advice or not. So you help them at the edges.
Yeah.
Right? And so, for example, like health-related stuff or like getting executive coach, especially as you are scaling an organization of going from, say, 5 to 10 or going to like 50 or 80, like there's very specific hiring advice. I'm just like, okay, if you're thinking about scaling, here's some things to consider. I've seen a lot of companies.
Yeah.
I've worked in a lot of companies. So this is how I would do hiring in your situation. Or for example, even just like being almost being the therapist.
Yeah.
So for me, even though I'm tough on my companies, I need to be the first person you call when something goes wrong, because I'm not going to yell at you, right? I know this is a game, but I'm here really just to be helpful for you. So sometimes it's just a matter of even talking something through. Yeah. Where I have this situation, what do you think? And I'm like, okay, use some optionality, or maybe it's like, well, maybe I don't know anything, but you should talk to this person.
Yeah.
And so my job is to be helpful in any way I possibly can be.
You mentioned exec coaching. I mean, I think it was Tony Robbins on the cover of Forbes, or Benioff. Somewhere there was Benioff and Tony Robbins. And it was like Benioff saying if it wasn't for Tony Robbins, Salesforce wouldn't exist, which I feel at that point, which is maybe 3 years ago, really brought coaching into the mainstream entrepreneurial. However, recently, $1 Trillion Coach with Campbell and I've always had a business coach because I want that context. I want somebody to watch me execute. And you mentioned it. So is this something that you see more acceptable?
Yes, for sure. I think that if you raise a Series A or a Series B, you absolutely need a very good executive coach, or else you are at a massive disadvantage. And all my best companies and best founders, they all have executive coaches. Almost, and that tends to be more US companies, less European companies. It's changing, but that tends to be much more acceptable in the US now. It's almost become standard.
It's almost like, it's part of the playbook. Yeah. And in regards to the way you want to support the companies, is it while they're in batch or afterwards as they grow? Because and I'll ask you that. Yeah. So how do you guys, when you say scaling support is one of the things 500 is trying to do, where is that? Where do you want to add that support?
I think we are exceptionally helpful during the batch. Mm-hmm. I would give myself, and that's probably like a B+ or A- in batch. We can always do better. Mm-hmm. I think post batch, I give ourselves probably like a C, maybe C plus, even that high.
Yeah.
And so it is a challenge having a large portfolio like we do. And I also think that our structure has always been about acquisition versus sort of retention piece.
Yeah.
And so that is something we've been working on for the last like year and a half of really building out a portfolio services team, helping sort of like a lot of the basic things. So we're way more helpful during the batch. We are focusing and putting a lot of resources against now. How do we be helpful to them after the batch?
It's interesting because I think it was Naval that told me a while ago, as an angel investor, you end up spending most of your time with the companies doing worse.
Yeah, for sure.
Which is kind of a bummer because, like, I invested in Intercom and I love Owen and Des and I would love to spend more time, but they're doing well.
Yeah, and you're like,
they don't really need my help. And they raise like a Series
you.
A and they've got like this stacked advisory board. So, how do you keep your sanity when you are essentially triaging? I'm assuming, in your inbox, if they're reaching out for help.
Yeah, I would say most of the time when a company pings you, like, hey, can we chat? You're like, okay, this is usually not good news.
Not good.
I would say
You're not
80%
going to
of the
tell
time
me
it's
just
not
close
good
your
news.
next round. Yeah.
And you know what? That's a job, right? And so I think like you have to like puzzles and you have to really believe in the mission. And you have to like, for me, like, yeah, there's some days when especially when you haven't gotten a lot of sleep like today, right? And you're like, oh, I just got to go do this thing. It's sometimes hard, but like most of the time, like that's the job and it's your mission. It's your firm's mission. It's my mission. It's to be helpful to them. And most of the time it's to be there when nobody else will be there for them.
What was your feedback loop? Because like as an investor, some people say it could take you 10 years to figure out if you're any good. How did you kind of give yourself a feedback loop in the early days of investing to know if you're making the right moves?
I mean, what is interesting? I mean, I was very lucky or unlucky, I think, to be an angel investor before I joined 500, and I wasn't a good one. So I'd say I did a bunch of deals where I don't regret. It's just like I knew the game.
Yeah,
I learned a lot.
Thesis.
I learned a lot of just like, oh, okay, this is how you think about these things, and so that was helpful. I think my first year of investing, I was learning the business. I was very, very lucky to run the batch.
The entrepreneurial business of an invest. Like people don't realize, you guys are entrepreneurs. You have to raise capital for the funds.
Yes.
You've got to, acquisition for the batches. Okay, so that.
So I was lucky to have both great mentors at 500. So Dave is an exceptional investor. Another guy I worked very closely with for almost 2 years, a guy named Parker Thompson, who's now an angel
Parker's
list.
awesome.
He's a great investor, like an exceptional investor. So watching the thought process. And then I was also very lucky to have like also really, really good investor friends outside, like a very, very accomplished investors. There's like 2 of them are on like the Midas list like every year.
Yeah.
And so they were very generous with their time to sort of help me think through. And I just also read a lot, talked to a lot of people, and I just did a lot of deals the first 1 or 2 years. And I can't say my first year of investing was like super successful because you don't know what you're doing.
Yeah.
And I was like,
you almost got to take a few swings.
You got to take a lot of swings.
Yeah.
And then after sort of, if I look at a lot of my best performing companies, best performing portfolio. So for example, Fund 3, which is when I started, and it was batch 14. In batch 14, I had Aircall, Pipefy, Havenly. I had another one that exited for like 7x of money recently. So Baker's another one they exited. That turned into, I think we put like a total of like 300 to 400,000 into that one. And that turned into like a $12 or $15 million sort of like stake. And it's publicly traded now. Yeah. So like there's a bunch of companies where I'm like, okay, like I think I know what I'm doing, right? Yeah. So when you start to see stuff like that.
Interesting. And what gets you excited about investing? Like, what is it?
I think a lot of, for me, it's actually, I mean, if you do a good job, it's about the money, right? But that's long term.
Yeah.
Actually, what I love about investing, and where I think a lot of investors get this wrong, why a lot of people don't stick with the business, we're in the human potential business, right? Investing is a human potential business in the early stage.
Unpack that.
And so it's about impact. And so for me, that's what I've optimized for, right? I'm learning all the time, but it's ultimately like, how can I change the trajectory of this company in a positive way, right? Even small trajectory. If you help them change their trajectory, even like 1 or 2%
over the long term,
that's huge, right? Like, so it's really about the aggregation of like marginal gains.
And what are you doing to help create that? So is human potential in the founders you're investing in regards to teaching them how to be better?
Yeah.
And in what ways do you feel like you're and out of all the ways they can become better, what's the Marvins version? Like, what do you focus on?
So the two things I focus a lot on with my startups is, number one, it's the customer acquisition and growth piece. How are you measuring your metrics? How are you experimenting to go and like optimize the growth metrics? Like how do you, the thought process around that, right? And how do you try different channels or sales channels and just help you get better in that area, build out a sales process.
Yeah.
The second thing is really fundraising. And so we think a lot about fundraising strategy. Should you fundraise, right? Like I was leading a panel on like bootstrapping versus VC. And the reality is that actually a lot of companies, particularly in SaaS, probably should bootstrap.
Are you guys cool batch companies not raising after you guys?
I'm okay with that if it makes sense. So I have one company, Batch 16, Mentimeter, Swedish company. The only money they raised was from us and a bunch of angels. They're crushing it. So I'm like, that's
so they
a great
can maybe
outcome.
do some debt, some mezzanine, some RBS.
Yeah.
They don't need to raise.
They're crushing
dilution.
it.
Yeah.
Crushing it. And so for me, I'm like, do what makes sense for you. And I also want them to be honest when like when they came in, they weren't sure of the direction, even though like great team, interesting business, I'll take the bet. Right, like it's a worthwhile investment, and they've been fantastic in regards to even just sort of speaking for 500 in like Sweden, and their business is amazing, and so I'm like, something will come out of that, right? Like there's gonna be something that's gonna come out of that.
Yeah, and then on the acquisition side, what are people moving more towards? Kind of like a sales, like a sales used to be back in the day, 2009, like sales was bad. Like it was product.
Yeah.
Now it seems like there's so much content out there, and Lemkin, I think, has brought a spotlight to that. And, other authors, Predictable Revenue, Aaron Ross, Stelly, FD. I mean, so selling is not a bad word. Is that something that you guys help the batch companies?
We do spend a lot of time. I mean, I built my time at Yahoo, I built probably 40 plus enterprise sales teams, right, across the globe.
Yeah.
And I built a bunch of telesales teams as well too. So it is something we spend I have a lot of, so I have like 14 full-time, part-time staff, right? And
full-time, part-time.
Yeah.
Okay, 14 people
Yeah.
that essentially report to you and what do they do?
So half of them are like EIRs, we call it entrepreneurs in residence, and half of them are growth people.
Yeah. And then do you guys have a lot of companies that end up joining forces? Like merge inside the batch?
Yeah, less so.
I always thought that would be a thing.
And what happens is companies that die and then they end up being hired several years later on by a batch company, right? Like that happens.
Yeah. And then how do you guys see yourselves adding value at the network level within the batches?
Yeah, that's a great question. I mean, it's always,
because do you guys do a big event every year other than the demo days?
just 2 demo days. So that's it. Yeah, that's it.
Okay, and then what about like meetups or
less so?
Less so.
So what we try to do through the Accelerator, we have like the welcome nights. So we ask all the previous like portfolio companies to come.
Okay, cool.
And a lot of the mentor network to come as well too. So that usually happens the first week of the batch. So it's a great way to sort of try to mix the old and the new.
Yeah.
And we're working on that. I think like we would love to have more turnout, but as you know, the startup world is like everyone's just super busy. Right? So a lot of our best alumni are just like, we're heads down, right? Like I've just raised my B and my investors are like breathing down my neck. So like, I don't have time
and you're
to
like,
step.
I can't really ask them to do that.
And I'm like, yeah, all right, fair enough, right? And so the great thing is that a lot of our alumni do come and they're like, if you want us to come and talk, like just let me know ahead of time. We will come, right? And so that's been fantastic. So we do have a lot of alumni who like batch 8, 10, 12, whatever will come and do talks.
And do you have internal Facebook groups for everybody?
We have a, the way that we have communications, there's obviously a Slack channel for the batches as well as alumni. We also have this thing called uni.vc. So all portfolio companies and portfolio founders have access to this thing. It's kind of like what Dashboard used to be. Yeah. So we have that. One of the things we're thinking about doing is actually doing more like founder events of just like, hey, like alumni founder events. So trying to do sort of maybe like a big conference of just like founders.
A CEO summit.
A CEO summit. And so it's something we're thinking about doing. Just there's a lot of
it's
a lot of things to sort of like, we want to do more of that in the future.
How big is the team at 500?
Worldwide,
full-time,
because as you know, we have like many funds. It's probably about 140 people.
Wow.
Yeah. But we have a lot of people, right? And we're in different countries and different operations. So we have a Southeast Asia fund. That's a pretty big team. Yeah. We have a Korea fund. It's a decent sized team. We have a Middle East team. Yeah. We have a Latin American team, right, out of Mexico. So, we have teams all over. Yeah. And so that explains it.
That's cool. Yeah. And then, Marvin, as you look back over the last, is it 6 years now you've been investing?
6 years. Oh, you'll be 6 years in February.
So as an investor, I mean, if I ask you the question, who have you need to become to be, the caliber investor that you've become today? What mind shift, changes, beliefs have kind of morphed over the years?
I've always thought that this was a service business, right? At the end of the day, money's a commodity. And so, and I've taken an approach of being sort of very brutal and very direct, which is much more New Yorker and not Californian. Because I thought, like, at the end of the day, if you are in service to founders, you sometimes have to say stuff that they don't want to necessarily hear. Even founders that you don't invest in.
Yeah.
I do have a reputation in that area of just like being super direct. And they don't always take it well, but I'm like, look, at the end of the day, it's actually not about them taking it well. It's like, am I helpful? Because I
am I being honest?
Yeah, am I being honest?
Yeah.
And I'm being helpful? Where it's like, at least you take something. So I've done this now for 6 years, and I was very wary about doing this first couple of years. I think a management team of 501 was also like, I don't know if I'm comfortable with sort of your sort of like your brutality of bluntness, of directness. Still a little bit uncomfortable, but actually it's gotten results. And I think a lot of my I would say definitely my top founders do appreciate it, where it's like nobody's honest to us, right? And I've had a lot of founders, even if I haven't invested in them, come over to me. This happens almost every conference. They're like, hey, do you remember me? And I'm like, I meet a lot of people. They're like, I met you about a year and a half ago, and you gave me this feedback, and you were a total asshole, and I hated you. But then I look back now, like you gave me like real feedback, and I took some of that, and nobody else is honest to me, and now my business is where it's at because like you told me, and I'm like, okay, that means like I'm of value, even though I'm hated for a short period of time. Or maybe a long period of time.
Those are the best. Or like founders like, you said this to me, and I walked around and I said, F you, and then that could be the fuel that drives them forward, right?
Yeah, so it's about it's service money.
Yeah.
I think about like VC service money, and somewhere along the line, I think a lot of people, I'm very uncomfortable with like VC as sort of like the cult of personality. Yeah. Like bow to the VC. I'm very uncomfortable with that because and I think it's partly because the guys I was trained with, the mentors I have, they're very in the background, right? Yeah. Like I believe in VC as a stagehand. It's not about me. It's actually about my companies.
Stage,
right? Like I don't want to be on stage. Yeah. If you go to demo day, I'm not on stage. Yeah. I'm nowhere. I'm just in the back and making sure everything works. Because it's actually their show. And so I firmly believe that, which is ironic being at 500, which is very
the brand is very out there.
Yeah. So
that's really neat. Where do people find you online, Marvin?
I'm on Twitter at Marvin Liao.
And obviously you don't want people just pounding your email with pitches. What's the best way for somebody to pitch you?
Find a founder that I invested in who will vouch for you, or find an investor that I'm really good friends with. I'm friends with a lot of investors who will vouch for you. Yeah. And I'm more than happy to talk with you.
Investors don't want to meet you. They don't want to meet you. They want to be introduced to you.
Yeah, they want to be introduced, and it's a filter. And especially as a B2B founder, as you know, it's actually a great test to go and figure out, can you find a way to get to me in an intelligent way? And worst case scenario, like send me a really well thought through, a really, really, really thoughtful cold email, because most of them are just kind of like, I just like, do you even know, like, do you even know who I am? Yeah. Or like, I'm raising my Series B, and I'm like, we're a seed investor, like, and that's like on the website, like that's all I talk about. Yeah. And so just like, do your homework, man. Do your homework.
Marvin, awesome conversation, man. Really appreciate
you. Thank you so much for having me.
Thank you, man.
Thanks for watching this episode of Escape Velocity. Be sure to like and subscribe and leave a comment with your biggest insight from our conversation. Be sure to check out the next episode.